Good morning and welcome back to Almus Market Mornings. Yesterday we had an unusually quiet day for the markets, finally giving us a bit of a breather after the roller coaster ride for the last couple of weeks. And it seemed like most of the investors preferred to stay on the sidelines ahead of today's RBI policy meeting, waiting to see if there are any major announcements or surprises in store. And on the US front, the initial jobless claims came in at their highest level since February, potentially reflecting the volatility around the Memorial Day holiday. And following this, and I mentioned yesterday as well, we have the NFP and unemployment data today as well in the evening. Good morning, Jayaram sir. Could you throw some light as to what the worst to the best possible scenarios can be for the markets ahead of the RBI meeting today?
Good morning, Eshan. Yes, I think RBI meeting is happening at a very important juncture uh, because since the last meeting in April, quite a few things have happened, and all that has a bearing on what RBI does in today's meeting. Like since this last meeting, we have had the inflation go up. For the CPI retail inflation also at 3.48%. Although it is below median target of 4%, this can be crossed in the coming months as the retail price of petrol, diesel, and gas have been hiked by the government. WPI hit a high of 8.3%. While this is not influencing the monetary policy decision, it indicates a pipeline pressure that eventually can feed into the CPI. Industrial production and PMI surveys have been good. So far, no broad-based impact has been seen, but then as inflation rises, the input costs rise, there can be some impact because the slowdown in demand can be seen. We've seen restrictions on imports of precious metals and custom duty increases. INR has moved from 90 to 50 on the day when the policy was announced in April to current level of around 96. That's quite a bit of weakness that we have seen. Headline forex reserves have fallen from 700 billion to 681 billion currently. Global bond yields have risen. Indian yields have been holding steady. Forward premiums have fallen from about 3.58% to 2.98%. So RBI has had to deal with quite a bit of change in the scenario, and most of it not so great. And the global situation continues to be challenging. There is no real indication that the US and Iran are getting closer, anyway closer to the an agreement or long-lasting ceasefire as well. Although what we can see is that Trump has managed to arrive at a ceasefire agreement between Lebanon and Israel. Again, the militant faction of Lebanon has not agreed for it. And then, importantly, the near-term oil prices have actually fallen, which indicates that supply probably going to increase, or that is what the market seems to believe. Some sort of a effort to open the Strait of Hormuz. So all this means that mixed picture for the RBI. Kind of some ways it is also bad, some ways it is maybe on the side of easing, but definitely they cannot be complacent. While I don't expect them to raise the policy rate, even though there are suggestions that they should raise to keep a check on the rupee's weakness, I think that is not advisable. We have seen Indonesia and Philippines raise rates and then see the currencies weaken to new lows as well. That is not something RBI will do. I have a feeling that they could change the bias from neutral to restrictive, because that's the way they can indicate that they are in readiness to act should the situation worsen on the inflation. So there could be some expectation about rate hike going forward if the inflation does not stay within the manageable limits. Then, because even the retail and diesel prices rising can lead to CPI going higher again. Now, while many analysts are calling for downward revision in the growth, the RBI might actually hold on for the current projection at 6.9% for FY27. Inflation projection can be slightly higher. They will, of course, maintain the current level of durable liquidity and assure whatever needed to be done. And the most important point is whether they come out with some measures for the forex markets. Now, in my view, RBI's in the RBI's purview, they can increase rates for FCNR deposits. Then they can restrict the outflows under the LERM scheme, which is currently at 2.5 lakh dollars per annum per individual. That can be halved, possibly, as per some indications that I've seen in the media. Then, of course, bring more categories of bonds under the restricted list, unrestricted list for FIS. That is a fully accessible route. These are some things they can do. Will they do or will they not do is still a matter of speculation. One thing which I have been telling of quite consistently is that measures have to be timed well. If the global markets continue to show stress, I think any measure may not have an immediate impact. So it's possible that RBI announces some measures, but not all. That's something that we need to see. But the scenario that I can see for answering your question is that if they do announce some measures, some not all, and then of course leave way open for more in the coming days, our rupee might see some sort of a short-term retracement towards maybe 95.50 or 95.60, but will not change the trend. But if they refrain from announcing anything, then it very clear for breaking 96 and 96.30 as well, because the demand is persisting. We can see that FI outflow this month has already crossed 3.5 billion. It's much more than the entire month of May, and we are just in the 5th of June right now. So the demand for dollars is continuing. Importers continue to hedge, and even exporters have not been seen panicking when it broke 95 as well. So very much they will hold on if it is at a higher level. The situation on forex continues to be challenging, and the natural way for the rupee is to be on the weaker side. Any measures have to be timed well and quite strong enough to at least put a break on the negative sentiment on the rupee. Otherwise, it can weaken more. Of course, as we said earlier, also levels near 97 may become more touchy for the authorities, and they could come out with some strong intervention or other measures as well. So overall, I think a lot of expectation about what RBI does today, and scope for disappointment is more than scope for positive surprises. That is the situation that we are in. So that's how we start the day on Friday, because the announcement starts right at 10 o'clock. Thank you.
Thank you, Jayaram. So, and just to summarize, the RBI meeting is happening at a very important time. Since the last meeting, a lot has happened, as JK mentioned. So we'll have to see how they adapt to the same, maintaining a balance between the domestic issues as well as the global uncertainty. And any measures to curb the rupee are to look out today mainly. And if some measures are announced and the way open for more in the coming days, rupee can see some short-term retracement with no change in trend. Whereas on the other side, if no changes are to be made and the RBI decides to stay neutral, a break of 96 and a move towards 96.30 is definitely on the cards today as the demand still persists. And the scope of disappointing is more than the positive side today for the RBI meeting. Thank you all so much for listening, and we'll catch up on Monday with the fresh round of updates. Thank you.